Hello, chart watchers, and welcome to this Monday, September 17th Market Watchers live show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we start off a new week, and we've got the Dow Jones Industrial Average down 17 points, the S&P 500 down 7. The NASDAQ getting hit pretty hard today, down 62, although it is off its earlier lows. The Russell 2000 went down, tested that support area again around 1706, 1707, trying to bounce off of it, currently down about 10 points to 1712. 10-year Treasury yield broke above 3% today. Big news, got up to about 302, but currently it is back down below 3 at 2.99%. Volatility a bit on the rise today with some of the selling of equities. Among sectors, materials doing very well, up about 31 cents today, which is a little more than 0.5% of 1%. Energy following suit, up almost 0.5% of 1% as well. Both those groups doing a little better as a result of the dollar being down a little bit this morning. Technology, though, and consumer discretionary, you can see taking it on the chin a bit on the bottom of the sector leaderboard. Within the consumer discretionary, there were two areas that I thought was kind of interesting. You can see the recreational services group doing extremely well here in September. This is one of the groups that has a historical bias to the upside in the month of September. Kind of strange, but it is certainly following its historical pattern at this point. And then we've got broadline retailers, which are getting hit. Amazon, Costco, Target, some of the stocks that have been doing very well of late have been struggling over the past few days. The group has bounced off its earlier low, but it is still down about, well, probably more than 1.5% today, and it is leading the consumer discretionary space to the downside. Well, Erin, I got rid of Flo.
Yes, excellent for you.
Yeah, Flo was an unwelcome guest this weekend.
Yes.
I shouldn't complain because we actually did manage to keep power, which was pretty good compared to some of the others around us in our area that lost power. And I can't even imagine the horror that everyone went through right on the coastline. The Wilmington area got really pounded. Not just from the wind, because it was only Category 1. I shouldn't say only. You're still talking about 90 or 100-mile-an-hour winds. But I think they got like a 10 to 12-foot storm surge and then just pounded and pounded and pounded with rain for the last 2 to 3 days, I guess. And so I've seen pictures, and it's just devastation there. So prayers to everybody on the coast.
Absolutely. No, it sounds like you kind of lucked out there. Just a lot of rain.
Yeah, we are in no need of rain right now. That is for sure. We're waterlogged.
I just wish there were a way to take all that water and transfer some of it here to Southern California, because we could use it. I will tell you what, we're getting drier and drier, through the summer. Hopefully we'll see some rain in the fall, because that's usually when we get to see a little bit of it. So.
Yeah, well, I think the good news, if there was any good news, is that I know some of the Mid-East area of the country, the kind of the D.C. area, I think north to Pennsylvania and even down into Virginia, has had a very, very wet summer. I think it's the wettest on record. So I think that flow, even though it is heading up into that area, has picked up speed. And I don't think it will last nearly as long going through that area, thankfully, because I know they really couldn't take any more of the water. If this had come in a little bit further north up into the Virginia area and Maryland and Pennsylvania, I think it could have been really as bad as it was in North Carolina. I think it could have been even worse had it hit up in that area.
Yes. Well, hopefully that's it for a little while. Give you guys a chance to dry out eventually here.
Yep, but we got a lot going on today, so I'll let you get into all of that. But it is good to see the sunshine here down in South Carolina, so that's good.
Well, it's good to have you back too, because we were very worried about you all weekend and on Friday when Mary Ellen was here. So
yes, thanks to Mary Ellen for that. Appreciate the thoughts.
All right, so let's see, what do we have coming up this week? Well, I know tomorrow I'm going to be doing a workshop, and I think it's going to be on step-by-step scanning. And then somebody said that I should add how to do alerts with that. So I will set that up for tomorrow. David Keller is going to join us on Wednesday, Thursday. Julius DeKempener is back with us, so that'll be great. And then I have a sentiment update on Friday. So we'll see how all of that's been going for the week and what to expect next week. Today's agenda, Monday setups. It is Monday. We'll have to see what Tom and I have in store, and well, see how we did last week. Not great. Earnings Spotlight will follow that up. John Hopkins is going to join us today. 10 and 10 to 1. Our first symbol is going to be Estee Lauder. And the final segment, of course, the DecisionPoint report. So I'll go over weekly charts and let you know what to expect this week. All right, so let's get started. Technical news and headlines. Tom, ready for you.
All right, let's take a look. Actually, I think I might have. Can you see my screen? I don't know if I may have on the right or the wrong button.
Oh, yeah, we can. We can see all those beautiful mountains. So.
Okay, perfect. All right, I wasn't sure if I hit the right button there, but okay, we're good. Yeah, we had the September Empire State Manufacturing Survey out this morning. Is really the only notable report. Last month, it came in at 25.6, but this month for September, it came in at 19. So it came in quite a bit lower than last month. And was also lower than expectations, which was 23. So not great economic news to start off the week. I did mention in my blog article this morning that we are starting the second half of September, and this is the bad half of September. Historically, there's actually, I think through the first 16 days, well, now I'm not seeing. Let me bring my screen back up again.
Yes.
All right, there we go.
There it is.
That should be better. Okay. I mentioned in my blog that the first 16 days of September have produced annualized returns that are about 10% going back to 1950, which isn't bad. That's kind of what the market does throughout the year. I think the number's around 9%. But when you get into the second half, it drops off, and it's like a minus 22% from the 17th through the 30th. And today is the 17th, and we are seeing market weakness today. And I'm not saying that, that's a slam dunk guarantee we're going to go lower, but it is worthwhile noting that this second half of September does tend to be weak. And I think the reason for it is, if you get any warnings, if you get warnings in the first quarter or the second quarter, a lot of companies will say, we're not going to hit our number this quarter, but next quarter is looking pretty good, or the rest of the year looks good. By the time you get around to September, if you're not able to meet your numbers, it's kind of hard to say, well, the rest of this year is going to be good, because you're running out of year. So I do think that these warnings, we need to watch to see companies that could come out with warnings. We have seen some very strong earnings results throughout the first 2 quarters of the year. So we'll see whether or not that holds up into the third quarter. I suspect it will, but still, just be on the lookout. Know that the second half of September historically is not a great time. As far as the 10-year Treasury yield goes here, you can see that we did gap up this morning. We got up to that 3.02% level. And that has been, ever since we gapped down and we saw such a huge move lower in the 10-year Treasury yield back in May, we have struggled to get back through 3.01%. So today's open was nice, but really like to see some follow through. Otherwise, the sideways consolidation could simply continue. We might see the yield pulling back. One area of the market that I think really does not want to see that yield pull back would be the financials. And so I pulled up a weekly chart going back throughout this entire bull market, looking at the 10-year Treasury yield here. That's what the top line is, or top part of the chart. And then down in the middle here, you can see this is the XLF relative to the S&P 500. Now, what I want you to see here, first of all, is that when the 10-year Treasury yield is rising, going through steep moves to the upside, check out the outperformance of the financials. Did the same thing from 2012 throughout 2013, and the financials outperformed the S&P. This doesn't mean that it's just going up. It means that it's going up faster than the S&P 500. And then if you look at starting back in 2016, when we bottomed on the 10-year Treasury yield and started moving up, you can see, again, we've gone through a period of outperformance by financials. But 2018 has been a little strange, because you can see this is the correlation. This tells us how the 10-year Treasury yield correlates to the XLF versus the S&P 500. And what this says is that it's mostly positive, meaning that when the 10-year Treasury yield's rising, we should expect outperformance by financials. But look what's happened in 2018. We actually moved higher. Financials have been underperforming. And then you come down here and you see that we actually went into negative correlation, or an inverse correlation, which you can look at the chart and see you don't really need that to tell you. But it is, when you look back over the history throughout the bull market, we do tend to have a positive correlation. And the last two times we had the negative correlation, you can see we quickly went back up into positive correlation, and we're doing that again. So my point is here to watch this 301 level, because if we can get a breakout, and especially up above that 310, 311 area, which would be a 6-year high, that would bode very well for financials. That's why I continue to keep financials on my radar. I'm thinking that this relative weakness in the group is actually setting up nicely for a bigger move, maybe later in the year, especially if we do get that breakout. Just something to keep in mind, that if the treasury yields continue moving higher, if the 10-year treasury yield does break out, there is a pretty strong positive correlation in terms of financials outperforming in that type of an environment. Let's take a look at the DJUSRQ, because that was one that I mentioned at the top of the show that's doing very well today and has been doing well throughout September. Let me just again glance quickly at that seasonality and show you that the recreational services group, if you go back over the last 15 years, September is averaged gaining 3%. And when you look across the board here, that's the best month of the year. There are not too many groups that can say that September is their best month. Recreational services is one though. And you can see that these 2 months tend to go higher, September and October. So we are in that sweet spot from a historical perspective. And you can see technically the group is also lining up to continue to do well. Now, it is overbought. We could use a pullback, but just keep in mind, this is a group that does tend to do well in the month of September. Mentioned the broadline retailers, so let's pull that one up real quick. That is our DJUSRB. And you can see we were down much lower. We'd gotten up to 2,100, and at today's low, we were back down to 1960. So that was about 6-7% drop at today's low that we've seen just in this month so far. So when you look at companies like Target, they've pulled back 5 days in a row now, getting close to the 20-day moving average. Amazon, of course, big number or big company in this space, looks a little bit like the broadline retail chart because this is such a huge component. But it did get close to the 50-day moving average, and over the past few months, 4 months or so, anytime we've gotten close to the 50-day, that's been a buy on Amazon. And then Costco, I mentioned earlier, Costco also taking it on the chin recently, but a really strong chart. I would expect to see some rebound here. And the last company I wanted to mention, not in the broadline retail space, but Kroger. Remember last week we talked about they posted really good numbers, beat top line, beat bottom line. I think they reaffirmed their guidance going forward, and the stock took a hit. And I think when we talked about it, we said support was down around this 27.50 area. Today it got down to 27.54. Look at the reversal that Kroger is putting in. That's a key support area on a stock that has been producing some really good results. Okay, Erin, I know you've got a number of upgrades and downgrades. What do they look like today?
All right, let's get to it. Okay. All right, here we go. So let's get started. An upgrade for you, Agilent Technologies. Thought we could look at this one. The first thing I notice right here is that we're hitting a little bit over $70 overhead resistance, and it's touched by quite a few tops here. So I would be watching out for that. But on the upgrade, we'll have to see how that works out. We do have a PMO buy signal. And we had that recent breakout above the overhead resistance here at just about 68.50. So I thought that one looks pretty good on the upgrade. Arconic was another upgrade today. And as you can see, I'm going to grab this annotation tool here so you can get an idea of what I'm looking at. Okay, so I see right here, although it's getting rather old, a rising wedge. And so although I do see the upgrade, and then look at the PMO, it's very overbought right now, near the top of its range at about 5. So, this is a great upgrade, but I'm also seeing some resistance levels lining up here. You can see on these lows back here, and we've hit it, and we're pulling back down into the bottom of that wedge. So although we're getting the upgrade here on our Arconic, I'm not a fan, as they say. Broadcom, Nomura moved this one from a neutral to a buy. It's been trading very volatilely. I guess it's been very volatile. And now we're hitting that 240 level. It sort of winds up right about here at the low that we saw back here at the beginning of July, end of June. So we're hitting that overhead resistance and we're having trouble getting above it. But looking at that PMO, it's very strong and rising. OBV, I'd like to see a little bit more action to the upside, get the next, if we get some positive volume today, looks like we will certainly close up. That would probably bring that OBV above that top that we just had. So, but overall, look at the trending up of the OBV. And then also we're seeing that on the scooter. So this one on the upgrade, I think looks pretty darn good. Okay, downgrades. Let's see here. Oh, actually we had, yeah, American Express was also upgraded today by Stevens. It went from equal weight to neutral is what they had listed it as. And you know, I see this as a good stock. You know, American Express is great. It's in the financial space. And I know you were just talking about it, Tom. But I'm seeing this really overbought PMO. Of course, we've seen it get higher. And, you know, the OBV is doing what it's supposed to. It's got a scooter in the hot zone. But it is starting to get really stretched out here. I think the fact that we're getting about 1/3% drop right now could be a good thing on this upgrade. It should follow through. We should see some more rally here. But watch that 5-day EMA, because if we lose that, you know, the distance, the margin between the 5 and the 20-day EMA is rather large, and there's a good chance you could see it come back down to test it like we saw back here in mid-August and in earlier this month. All right, downgrades. ARNC came in, Arconic. I think I went right down the list, didn't I? All right, Arconic, we did look at. This one was downgraded, Longbow, from a buy to a neutral. And we have TMO. Thermo Fisher was downgraded today. Let's go ahead. And that was Goldman, who downgraded from a buy to a neutral. And look at what we're getting on the downgrade, a huge gap down. I think the only bright side I could look at here, and I'll annotate it for us. I'll get that auto support. I think the only bright side right now is it is trying to hold this area of support. So far, so good. But wow, that PMO top below the signal line. You can see the declining tops here on, there we go, declining tops versus rising tops on price. That's a negative divergence. You know, it could have played out at this point with that drop, but the fact that we didn't get the PMO into, you know, the fact that PMO is turning down on that big gap down, that worries me quite a bit as well. So even though it looks like we may hold support, I'm not thinking it will. I think we're going to see that it'll move lower just based on the fact we have that PMO negative divergence. So I'm not liking that one very much at this point. And HRL, Hormel Foods, downgraded today by BMO Capital from a market outperform to a market perform. And you can see that they're having problems here on this downgrade with a gap down. And, you know, price is sitting here right around the $41 range, could form some support. But I really, this PMO is turning down on this drop of a little over 2%. It's been, you know, the stock has been doing quite well, but it appears to me that it has gotten just a bit too stretched out, and that would make sense why we are seeing that market outperform to a market perform. I suspect that they're expecting some problems in this space, and, you know, looking at that gap down, not good. And then the PMO, as I said, declining. All right, that concludes our upgrades and downgrades today. And at this point, let's go ahead and move into Monday setups. Let's see how we did. I already know how we did.
Let's not. Let's move on.
Let's not and say we did.
Yeah. No, yeah, my last two have not been good the last 2 weeks. And I owned both of them, which is not good either.
Yeah, it's been tough for us the last few weeks. And I'm going to go ahead and grab that screen back so we can look at what we're doing here. So let's look at RSG was, whoops, not RSH, RSG was mine. And I know that it started off really well. I mean, we had a really nice move. It got up over, almost to 75 there on that move up off of that Monday. So here's Monday, so we can see I picked it up right in here at about 74.02, I think, 75.02. And now it's currently reading at 74.99. So did lose a little bit on that one, not a lot, but certainly didn't follow through like it was supposed to at all. So I'm not too proud of that one. And let's see, what was your symbol?
Yeah, I don't remember. ONDK. I'll just take it on the chin.
ONBK.
OND. D is in David.
My ears aren't working together today. Okay, here we go. Yeah, not good.
Yeah, I was looking for price support and gap support to hold right around that $8 level. And
Yeah.
so I got stopped out last week. And the thing was, right after it, we talked about it, I think it got up to about 825 or something like that. So it did make a little bit of a run to the upside, I think either on Monday or Tuesday of last week. But yeah, rough ending to the week for sure.
Yeah.
For ONDK. I still like the stock longer term. It's just once it breaks support at the top side, it opens up the chances that we're going to go a little bit lower down to test the bottom of the gap support. So you got to be careful.
All right. So I was preparing my DecisionPoint report. I did manage to filter down quite a few Monday setups. I haven't filtered them down to even lower. So what I'm going to do is look at them at 10 per page. And as we're going through, I'll give you my thoughts on each one. And I should have my pick at that point after I'm looking at what's going on. But I think I already know which one I want, but let's go ahead and take a peek anyway at what we have. So Claris Corp, I liked the setup on this one. The PMO is starting to, flatten out though. It was on the rise, but I don't think that that's really a huge problem here. We are getting about 0.25% downside. So I like that because we got the breakout earlier above that August top. And now we're coming back down to sort of test that. May need to take a little bit more move down toward that $11 level before we see it turn back up. But I like the setup here with that really nice OBV, and the scooter has been in that hot zone for quite some time. So I would expect, I would have a bullish expectation of this one. So Claris Corp was one that I'm certainly eyeing closely as my pick. DVY, and I have to tell you, this is one of my longer term holds in my own account, and it's coming up now as a short term possibility, short term buy. And, honestly, I like the setup here on this one. You've got the breakout above this area around 102, which was holding as overhead resistance. And then you have a rising bottoms line. So it looks to me like we actually have an execution of an ascending triangle. And that would tell me to expect an upside move, about 150. $1.50 to the upside is what I'm seeing right here. So I think that one looks pretty good. The only thing that worries me a little bit is that long tail to the upside, that wick that's coming up on what could be a shooting star type of candle. And again, I'm not a big candle person, but just seeing that shoot to the top and then a pull back down could be a bit of a problem. But I think DVY still looks like a good possibility. But I think I like Claire better, CLAR. So far, so good there. Okay, another one that broke out of what I would consider possibly an ascending triangle. I think that it's a loose version. But we are still seeing the move up right now. First Trust Value Line Dividend, FVD, is on a breakout, unchanged currently, which tells me I could end up with some kind of a doji there, and I think that would be a positive. But the PMO is starting to flatten out here on that pullback from today's intraday highs. So I think that FVD looks pretty good, but it wouldn't be my choice. And let's see, we have MBIA Incorporated. This is another one that came up for me, and you can see that the PMO is starting to gently rise, easier to see in the thumbnail. we got a little bit of a breakout here. You can see right there above that very short-term overhead resistance, but we pulled right back down. So again, we're having these highs, intraday highs, and seeing some pullbacks here, but the PMO is still managing to rise. I think this one looks pretty interesting because you have strong support here right at that 1050 level. So I think this one could be a good choice with a stop around 1050 if you want to just make it really tight for a really short-term trade, maybe down to even 1045. But I think this one has some pretty good upside potential. So I'm going to write that down as one of the ones that I'm interested in making my pick. And here we go. A nice breakout here on Pfizer. Pfizer was definitely one that had been on my radar. Nice breakout from overhead resistance here. And, we're not seeing that major pullback off of an intraday high like we're seeing on the others. So I think that little breakout there is very encouraging. But we might be just a hair late on this one because we got that breakout on Thursday. Friday gave us a little bit of a continuation. And we're still continuing on going in the right path with the 3% to the upside. All right, RCI, Rogers Communications. This one is, I've got the rising PMO. The OBV looks pretty good, hot zone scooter. And there's still a lot of upside potential here. And if I were to annotate that declining tops trend line right through there, this would be a little bit of a breakout currently on Rogers Communications. So I like the look of this, but I think the upside potential, I'd be looking up here towards overhead resistance, and I think I'd want a little bit more upside potential, but RCI as a possible short term. SPHD, this is the S&P 500 high dividend, low volatility ETF. The setup looks pretty good here, but I would like to see it get to past that overhead resistance. So this might be a little bit more of an intermediate term investment or even watch list potential here on SPHD. SASOL, SSL, and the PMO starting to flatten out right now, but you can see why it came up on the scan. We've got a higher OBV top here. I think that's positive when you look at the tops on price, which are declining. So I think that could be an interesting play right there. You could say that we have a bit of a flag going on. There's your breakaway gap. Upside, I'd look at about $40 toward that overhead resistance, and you could make a pretty tight stop here at that 20-day EMA. So I think this one has, SASOL looks pretty good, actually. I'm going to write that one down. UGI Corp Holding is another one. Looks like it's forming a flag. The PMO buy signal is just about ready to occur, and the breakout above the what could be sort of an Eve Adam double bottom. I don't think that's a such thing. There's Adam and Eve double tops, but you got the breakout from that declining tops trend line, could be forming a flag here. I like UGI. I think that one looks pretty good. And those are all of them. And given what I've written down, I think I'm going to come back to, and I think it was, yes, Claire Corp. I still think I like this one. Oh, DVY though. Oh, it's so hard. I'm going to go with MBIA. I think the upside potentials here is pretty good. It's a low price stock, so I might be able to edge you out on a Monday setup. So for the sake of the exercise of the Monday setup, I think I'm going to pick MBI, and it is currently at 1060.
All right, sounds good. I am going to go with VRNT. This is the one I featured in my blog today. And I don't own this one at this point, so maybe that'll give me a little better chance. Bounce back from the last two, which I did own and ended up getting stopped out on both of them. But VRNT came out with really strong earnings. This is also in the software space, and I feel a little bit better with a software company, especially one getting close to support here. So I mentioned in my blog article this morning, it had closed around 48 on Friday, and that left about $1 downside to a closing support level at 47, although intraday you could go down a little bit below 46. But with today's low earlier getting down close to 47, I really like the reward to risk on this. because my target would be up around 52, which is what I'd look for eventually. And I could keep a fairly tight stop, either close below 47 or could even go down to an intraday low below that 40, say 45.90 area. But I do like this one, so I'm going to pick this one. And the price, let me get an update, just see where we are currently, because the screen's been sitting there. I got 5 cents better, 47.60. So I will go with Verint Systems, 47.60. I'd be careful again on a close below 47 or an intraday move down here below that 45.90 area. So you can keep a fairly tight stop on this one, and I'd be looking for that target up around 52. The other stocks that I had, and the way you can find these, every Monday I've been putting them in. If you go into the Trading Places blog that I write each morning and pull this up, and you can get to this, by the way, just by the drop down menu from the blogs area, and click on that. That'll bring up this page, and then just click on this live chart list, and this will give you the setups that I have, not only for this week, but the setups that I've had in the prior weeks, which I think will at least give you some idea of some of the things I'm thinking about where maybe we might see a turn. So VRNT, as I talked about, there's your trend line. You got gap support and trend line support coming in right at about 47. We hit that earlier and trying to bounce off of it. The other stocks that I liked, AJRD, this is in the defense space, but here's a stock went straight up. Beautiful volume here on the move up with earnings. And as it kept moving up, look at these pullbacks all around 33.5. So I think you've got pretty good support around 33.5, and the 50-day moving average currently at 33.55. So I think AJRD looks very interesting with a target up around 37.5. Commerce Bank Shares, CBSH. I mentioned earlier the financials, and this is one of the better looking bank charts. Now, it has had some pressure here of late, but I think volume's been kind of contained. We're in a really nice long-term uptrend, and I think the closer you get down to around 67 area, the better I like Commerce Bank Shares. So this is one I'd certainly keep an eye on. CVA, Covanta, I think is in the waste disposal area. You have to double check me on that one, but big move up on volume with earnings back at the end of July. And so that established a little bit of a support area. And make this chart just a little bit bigger. You can see the support area just below $17 down to about $16.50. That would be the bottom of gap support. So we're just now entering into this area of support that I like. I think I got two more here. Lattice Semiconductor. Now, semiconductors bounced last week, but if they lose support, you're going to want to be careful in just about any semiconductor. And I think that level on the DJUSSC was at about 33.50, so I would watch that level to the downside pretty closely. But LSCC, look at the volume trends. This has been one of the better performers, certainly over the last 3 to 4 months, one of the better semiconductor stocks out there. And each time it's fallen back from about 710 to 750 into this area, it's been a good buy. So hopefully it'll bounce again off of this zone. I do actually own Lattice Semiconductor, just disclosure there. And then the last one here, Tilly's, TLYS. This one I actually own as well. Yes, big volume on the way down, but I think there was a lot of panicking. This stock after earnings went from 18 to 25 in 3 days. Heavy volume on that move, by the way. They blew away their top and bottom lines. And then as we pulled back, I was looking at support around 19 here, and then gap support, the bottom of gap support at 18. So I think this is an accumulation zone, and I'm looking for Tilly's to make a reversal back to the upside. But currently down quite a bit today, almost 3%. And I think that was the last one for this week. So those are the setups that I had. And Erin went through her list, and then we came up with our final picks. Oh, put the VRNT at 47.65 and didn't give me that 60. That nickel might come into play. But, all right, I'll go with 47.65. That's what was on my chart when I first pulled it up.
Yeah. And I have to say, when I ran my scan today, I got 22 stocks. And so that tells me honestly that I may want to start looking to get some of that money off the sidelines. I generally don't get that many.
Yeah, I think, technically, I still think the market looks pretty good. There are certain areas that look a little toppy to me. I was pointing out transports. I'm a little nervous about transports right now in my blog earlier, but I think overall that the market looks pretty good. But second half of September, you do have to at least be mindful that this is not a very good time of the year historically. So Anyhow, all right. Well, that wraps up the Monday setup. So let's move into the earnings spotlight. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. And our beat reporter from the shores on the East Coast, John Hopkins, how are you doing? You weather the storm?
Good. I like that. I like that title.
Beat reporter?
Yeah. That's catchy.
Yeah. How'd you manage to fare throughout the hurricane? I know you are on the south side.
Yes, that made a huge difference, obviously. Being in Charleston, I was here a couple of years ago when Matthew came through.
Yeah.
And even then it was like a category 1 when it finally hit. And it's really funny because when you listen to all the forecasts and see what's going on, and they talk about various categories, 1 to 5, but even a 1, can be potent, depending upon the surges, of course, that are going on as well.
Well, I was just going to say that's one thing they did say about Hurricane Florence. They said, it did they lowered it to a category 1, but they said it was going to be a category 5 in terms of flooding, and they were not wrong.
They were not wrong. So, hopefully they'll be able to get that, taken care of and cleaned up. But I don't know, Tom. Every region has its own perils, things to deal with. So
yep.
It's just, this is that hurricane season. Hopefully we get out of it okay.
I would agree. Hopefully everybody in that Wilmington area and just north of Wilmington, my family vacation just north of Wilmington almost every year, Topsail Beach. And I've seen footage of that beach, and it is just awful. It's absolutely horrible. I can't imagine the folks that stayed and had to try to get through that. But anyhow, things hopefully will begin to improve as the storm moves north and gets out of the Carolinas. So that's a good thing at least. But what do you got for us for today for the earnings spotlight?
Well, it's kind of interesting because this is sort of like earnings season no man's land. Right now we're in the middle of September, which has got a history of being a little rough on traders. We're well past, Q2 earnings season. In another, 3 to 4 weeks, we'll start getting heavy into Q4. So right now, there's not a lot going on with earnings, but I will say this. I do believe one of the reasons that the market has held up so well is earnings. In other words, company, even though there's not a lot of earnings reports going on right now, the companies that did report leading up to now have been very strong. And so I think one of the things that's keeping the market high is earnings. And one of the things I pointed out in my Chart Watchers article this weekend was, we track companies that beat earnings, and if they have good looking charts as well, they end up on our chart list. We call it a candidate tracker, also known as our chart list. And we're over 300 on the chart list right now, which is a record for us. And I point that out to show the correlation, right? The market's strong because there's so many companies that are reporting strong earnings, Tom.
Yeah, the number of companies that have been reporting better than expected earnings, it's more than I've ever seen. And I know, I've got over 300 on my strong earnings chart list as well. I know we've synced those chart lists up here just recently. And I actually gave an offer in my blog and then also at Chart Watchers over the weekend to send out that strong earnings chart list to anybody who wanted to use it. Of course, you do have to be either an extra or a pro member to be able to download that list. But I think it makes a big difference in trading results to trade companies that do beat their consensus estimate.
Yeah, absolutely. And one of the things I also mentioned, and I have a couple stocks to go over here, but just before I do, I mentioned in my article as well that I'm going to be starting a new free newsletter, which is kind of awesome. It's going to come out, it'll come out before next quarter, within the next week or so. And really three components of it. Really strong emphasis on reward to risk, on companies beating earnings. That's our thing here. It's reward to risk, that if we go after a stock, it's going to have a 3, 4, 5, 6 and higher reward to risk to the upside. If it goes against us, we're not going to get slaughtered. So that's really important to us. The second thing is highlighting stocks that display technical analysis worth monitoring and mentioning. So we're going to be pointing to some stocks that either could be setups or maybe have reported earnings and show how they've done, and how, if you're patient, you might be able to participate in the pullback. And the third thing, which is something new for us, which is, I think, kind of interesting. It's one of the stocks I want to pull up in a second here. Highlighting companies with upcoming earnings that could expect a major, we call pop or drop, like a move to the upside or downside. And even though we don't recommending holding stocks into earnings, we know some people thrive on that. And so I'll give you an example. If you can pull up a chart here on that TTD.
Yeah, I saw that one in your newsletter, so I'll go ahead and pull up the current version of it here.
Right. Yeah, pull up TTD, and then you will see three distinct periods when they reported earnings. That they made really nice moves to the upside. So you've got some consistency there. So you can see it's so clear through the last three, the big bars, volume bars, the gap ups, the nice consolidation, then move higher, kind of beautiful consolidation, report earnings. Those are some pretty nice pops, as I would call them. And so we'd like to alert some people from time to time, especially as we get close to earnings season when tons of companies are reporting. I think people will find that fascinating.
Yeah, and I think those who do like to play stocks into earnings, I think it would be a good thing to have the history, at least, to know what the company has historically done. I mean, this trade desk, TTD, unfortunately, this one, you almost have to be in going into earnings in order to get most of the gains. I mean, if you look back, the gain that was made back in February was all on earnings. The next 2.5 months until the next earnings report came out, the stock was mostly sideways to down, and then had that massive gap up again. It did go a little bit higher after its earnings report, but then again, the big jump occurred with its earnings. So, there is definitely, I'm not one who likes to take that risk, because I do feel like you're just putting your money on red or black at the, roulette table in Vegas, which I don't really like to do, especially, with some of these companies on the NASDAQ that can go, like this one, 10, 20, 30, 40%. I mean, these moves are not small, and they do happen in the other direction. We saw this back in November, by the way. The stock was down $10.
Yep.
So, they do go both ways, and you got to be willing to take that risk.
And the one thing I would say about that is, if you're going to hold the stock into earnings, and it doesn't have to be everything you have. Right. You don't have to have 100%, but you could have 5%. Or 10 if you want to have something like that. Instead of having like a massive position, maybe a smaller position, so you do benefit if it goes up, but you don't get massacred. In the case, like back in when you showed, back in earlier or late 2017.
Yeah, November 2017. That was a big drop. I mean, it wouldn't have felt very good having it to the downside. Certainly these 30, 40% moves to the upside would feel really good, but just know that they can go the other way as well.
Hey, I'll give my email address after I go through these next couple of stocks. If anybody wants to jump in on this new newsletter, I think it would be exciting. I'll give that to you. A couple other stocks real quick.
Okay.
Stay. STA, well, I'm hoping this one stays, around for a little bit.
Yeah.
This is our chart of the week, and one that if you had the 200-day moving average, you'd see that it's right up against the 200-day. And here's a great case of reward to risk. Okay, is that we like to get involved in stocks when they approach key price or technical support level. You can see 200 days is a big deal here. It's held up pretty nice above that level quite a while. So this is one where, we get involved right at the 200-day, and if it closes below the 200-day, we're out. And so the reward to risk is high, because if it holds here, I could easily see see this thing get back to 20.5, 21, maybe higher. To the downside, maybe you get a few pennies if it just doesn't close over the 200-day. That's what I mean when I say a really high reward to risk.
Yeah, I think too, I'm looking at that gap support from big volume back at the end of May, and that gap support's at 1962.
Mm-hmm.
Stock's trading at 1967. So literally,
Yep.
you see all these intraday moves down below both that 200-day and gap support, but so far been holding both. And the other thing is this one's got a history of bouncing off its 200-day.
Exactly.
Yep.
So I think it's a good one. The other two stocks, actually, I think you mentioned these, and I didn't talk to you about these before, but one is TLYS. This is a stock, by the way, that is an active trade right now. We got involved in it right around 19 with a second entry at 18 and a stop below 1750 and a price target of 25. So if it goes against us, we'll have an average entry price that might end up costing you, 4 or 5%. But to the upside, if it holds and turns, the reward, up to that 25 level is pretty substantial.
Yeah, well, I'll warn everyone that's with earnings beats. I own this one, and last few days have not been good. I keep getting stopped out, so just want to throw that out there. And full disclosure, too, by the way, but I do own this one. I got in about the same time, actually. I liked both these entries. I liked the 20-day, which was up around 19, and I think gap support here at 18. We got down as low as 1787 intraday, so this will be a pretty good day to see a reversal on Tilly's.
I'll tell you something, we don't have time to get into it now, but I'll tell you something really interesting. We've had a little string of stocks lately. Even though the market's been strong, you're going to have periods where stocks stop out, particularly, Tom, when you have tight stops. And that's the whole idea behind it. But, we go back, you can go back a year and a half in our trades, and you'll see the average loss is maybe 1.5% to 2%. So even if we go through a period, that's rough, we could have maybe a couple of stocks that do well and a half a dozen that, stop out. But because the stops are so tight, it doesn't have a major impact on your bottom line. So that whole stop thing is important. And then the last one I've gotten is VRNT on my radar. I heard you talk about that one. And again, we hadn't discussed this, prior to your going on the air. This is one. Look at that beautiful volume gap up, and why I'm trying to figure out why it's getting punished so much. And to me, this presents an opportunity, with a tight stop. If this thing holds and the market cooperates, you could get a nice march higher on this one.
Yeah, it's getting punished because that's what happens. That's how the market it goes up, it goes down. I mean, you're better off buying when it's going down than when it's going up, in my opinion. But that's my strategy. But they posted great results. You can see the huge volume, major gap up, and you just got to keep in mind most stocks do fill their gaps, and the reason is pretty simple, because when everybody wants to buy and there's this kind of volume and folks are jumping in, market makers have to provide the liquidity. They're on the other side with the taking a short position, short term. Now that doesn't mean that the stock is going to go down forever, because market makers are in their positions, don't last very long, but they are on the short side, and that's why most companies' stock, when you gap up like this, most of the time they go back and fill gap, or at least go back maybe and hit a 20-day or something before turning back to the upside. But I like VRNT. Here's a chart of the software index, and this is a group that's been one of the leaders throughout the last year, as you can see. Now Verint, which was going down versus software for a while, with its earnings actually had broken out to a multi-month high, and of course pulled back. So I'd like to see this gap support area here hold.
One thing I will say, Tom, if you look at the earnings and the pop there, we call the earnings pop, right? This is the whole patience thing is part of what we're about. Let's say you didn't own this stock and earn it. You saw it pop. You said, "I'm going to get in this thing. People want it." Yep. Well, you could have been in on this thing around 52, and 3 days later you're down to 49, and you're saying, "Darn it!" So the whole idea is to let the event occur, see what kind of reaction you get. Wait till, Tom, I haven't seen a stock ever that beat earnings, went higher, and never came down again. And I mean ever. Okay, so sometimes it'll be a few days, it could be a couple of weeks, it could be a month, but sooner or later these stocks come back to key support levels, and if you're patient, we can show you that this works.
Yeah, there are some companies, I'm sure Netflix and Amazon and some of those companies, Apple, that have just gone up and up and up over the years, that I'm sure they have some gaps somewhere on their chart that never got filled. But these are exceptions. I mean, most companies do fill the gap or at least start working toward it. I mean, when you look back on the chart on Verint, this thing has a history. You can see the gap up in March, the huge gap up, and the stock pulls back. It doesn't go all the way back down to gap support. But if you bought in at 43, you wouldn't be very happy a week later at 39.
No.
And so, but check out 2 weeks later, it was back to 43 again. So this isn't like this is the first time this has ever happened where you get a gap up and you pull back. This is kind of the norm for a lot of stocks.
Yeah. Okay. Well, that's pretty much what I wanted to share. If you want, I'll give you my email.
Yeah.
It's John, John, at InvestEd Central, INVESTED Central.com. And just shoot me a note. Just say, add me to your list. And when we launch this thing over the next week, 10 days, then I'll make sure that folks are added.
Yeah, and I also, if you didn't get that email address or whatever, you can always go into John's article.
Yes.
In Chart Watchers this weekend, there is a link in there, or not a link, but I think you gave your.
Yes.
I think I saw that you had your email address in there.
Correct.
Yeah, so you can go check that out. But
sounds good.
Yeah, always a pleasure, my friend. I'm glad you're safe down there in Charleston.
Thanks so much.
Yep, we'll see you in a couple of weeks.
All right, take care.
Yeah. There he goes, Mr. Hopkins from Earnings Beats. Yeah, I think that some of the things he talked about, Erin, especially the new newsletter that he's talking about. That's a free newsletter, by the way. I think those are pretty important lessons, and it doesn't really matter whether you're short-term and trader or longer-term buy and holder. Everybody's got their threshold for pain, and once you get below that, you've got to have a stop in play. And I know maybe we don't have bear markets very often, but let's not forget 2000 to 2002. I mean, great companies. I remember Cisco, one of the top companies. They made lots of money, and they were $73 a share. And when all the dust settled, I think the stock was back down to like 10 before it started moving back up. So even the great companies, you've got to be careful if you get into a bear market. Everybody needs to have stops in play.
Absolutely. I have to say, I just do just for peace of mind. A lot of times I don't put in that hard stop, with the broker, but I'm watching it very, very closely because, especially on those parabolics, you just really have to be careful. That's when you really, if you don't have a stop on a parabolic pattern, you're really, really opening yourself up for a lot of pain.
Yep.
Okay. Well, 10 and 10. I have a pretty good amount. I'm going to go ahead and show you what we have on the RRG here. So we had about 28 requests, and I'm just going to run through what we have here. You can just see where everybody's going. Square is making the right move. Qualcomm. You can see a lot of those northeast direction stocks. So there are a lot of them. I probably won't get to all of them, but just to give you an idea of sort of what we're looking at here as far as the different stocks that we have in the 10 and 10. So also here are the sectors, just to give you an idea. Cyclical, certainly where the interest lies today, with healthcare and technology being about the same. But I always find it interesting to see what sectors our viewers are really paying attention to. Right now, it looks like cyclicals. So with that in mind, Estee Lauder is our first.
Okay, let me pull up. This one's pretty simple. And first of all, their earnings have been really good, but I would be careful because I do see a neckline here and a potential. And I say potential because, most of these topping patterns don't execute during bull markets, but you should still be aware of them. There's a lower shoulder line from left to right, and there's also a slightly lower neckline from left to right. These are a little bit more bearish in my view. This was where the earnings came out. We had a nice gap up. We came back down, actually went below gap support. but not below recent price support, and then turn back up. I think a break above 145 would start to be pretty bullish. We have been holding this rising 20-day moving average, which I find to be very good in the short term. But just keep in mind, if we lose 130 to the downside on a closing basis, I'd be real careful with Estee Lauder. I think it goes higher. I don't think this topping pattern executes because I think the market goes higher, but I still would at least recognize that it's there.
All right. Let's see. The most popular in the chat room. There are actually two of them, so we'll probably do both. But the first one is Teva, Teva, of course.
Okay, this is another one that looks a little similar to what we just looked at with Estee Lauder. I know we're in different areas of the market, but again, I think you could take a look. Slightly lower neckline and slightly lower right shoulder so far, although we are getting some nice volume on today's move. And I would be interested to see whether or not that rising 20-day moving average holds on a pullback. So I think this is another one that's setting up potentially with a topping pattern. I don't think it executes. Instead, I'd be looking for a breakout above the 26 level.
All right. Let's see. Let's take a look at the other one that was voted on, Sprouts Farmers Markets, SFM.
All right. Trying to, oh, thought I'd save this one. Let's try this again. All right, I'm not sure why it's not saving. Let me see if it's there. Nope, it's not there. Oh, well, we'll keep going here. SFM?
Yes.
Yeah, I think I'm just slow. It might be my internet. I had some issues at the end of last week with my internet, and certainly is struggling here. I'm not sure why. There we go. Okay, SFM, I think in the short term, stock looks really good. It got made a huge move. I mean, it needed a pullback, was very overbought. I would be looking, though, for a 20-day test to hold because the PPO was so strong at the recent high. So let's see if we can get this one to see if my internet holds up here.
Mm-hmm. If not, we'll just, I'll send you the list.
Yeah, I'll get them annotated later if it doesn't work out here, but let's just see if this one works. There we go. All right, what's next?
All right, the next one is the Thailand Capped ETF, THD.
All right, THD. Well, there's a pretty interesting area of support and resistance that this is always, I'll use this rectangular thing here and show you how I show a support area instead of just a support line. You can see that right at about in that 29 to 30 area here, or excuse me, 29, I don't know where I got that from, 91, 92 area, you can see that we had pretty good support going back to February and then again in May, and then we broke down. And then if you look recently, let's pull up, and I'll use red this time, and try to get it roughly the same. But once you break that support zone, then you have resistance zone from 91 to 92. And there we are right back up in that area. So this is where we held before as support. Now this is an area we're trying to get back through. I don't like it until we get through. I think this is, we had rolled over. We were downtrending. Now we're testing key resistance area. A break above 92 on a closing basis would start to look better to me. Until then, I'd be careful.
All righty, next one I have for you is GIL. This is Gildan Activewear.
Yeah, I actually like GIL. I wish I had bought into it when it came back down here and tested this support area. But right around 29, actually went a little below, but it did hold the 50-day moving average. This is one of those where you can see the huge move to the upside, very, very heavy volume. And I think this gets right back to the point I was just talking about with John Hopkins. Huge move up. This is one where it gapped up and kept going. And so normally I don't look for the bottom of gap support right there. Instead, I normally would be saying that is about as far as I think it's going to go to the downside. Because when you gap up like this, on this kind of volume and keep going higher. Remember, as everybody's buying at the open, market makers are on the short side. So when you get a candle that looks like this, it's like the demand just swamps the market makers, and essentially they just give up and let the stock go. And so here you can see beautiful move up in GIL. We pulled back. Now I would say that you've got pretty good support right at about 28.80 or so. So this is the area. This would be the accumulation zone. This would be my target up at 31.5. Currently, I wouldn't do anything. It's already bounced. I mean, it's bounced mostly 5 or 6 days in a row, with one exception there. So I think I'd have to see a little bit of a pullback. But I do like the stock. And if we got the pullback, I'd be a buyer if it got down under the 29 level.
All right. I like this chart. I'll be curious to see what you think. Lincoln Electric Holdings, and it's LECO.
Okay. Yeah, I like the fact that it broke out here. I'm going to put this one in the relative chart because I'm just see which group it's with. I think that's industrial machinery, FE. But the group has been on fire. So you got a stock that's breaking out within a group that's been very hot of late. So from that perspective, I definitely like it. Now, what would I do if I got in? First of all, that is a key area right here at about, was that 94.75? We broke out yesterday on some pretty decent volume. If we fail, what would I look for? I talked about this before. I'd be looking down at the rising 20-day moving average. So right here, if we fail on that breakout and come back down, I think it will reverse off the 20-day. So that's what I'd be watching to the downside. But yeah, this is a good stock in a good space. So it's one that definitely would have my interest.
All right. Yeah, it was the only industrial requested as well today. So Cognex Corp is the next one, CGNX.
Okay, yeah, there's another one I like. I think that's a change in character candle. You got another stock that's in a group that's breaking out. This is in the technology area. But here was a key level to clear to the upside. That's where you had closed, and there was that intraday high. That's where the sellers started kicking in, and we went sideways, couldn't get back through that level. Now we've negotiated that to the upside. So I think the next level is going to be up closer to 60. I think from the rising 20-day moving average up to 60 is your trading range. I think this another one looks pretty good.
Okay. The next one I have is AIZ Assurance.
Yeah, this was on my setups a while back. I had it. I got stopped out barely, and then the thing reversed. Of course, just the way it's been happening here for me of late. But I like the group. It's in I think the life insurance space, and we're waiting to see if we can get a breakout on life insurance. Now the problem is, and I'll annotate this on this relative chart as well. I mentioned this one in my blog article this morning. You can see the difficulty that life insurance is having trying to get above recent highs. So I'm going to say right above 800. I think 810 might be like an intraday area. So 800 to 810 is a level to watch. If we get a breakout on life insurance with interest rates also potentially breaking out the 10-year treasury yield, this is an area you want to watch because heavy volume. This was making a beautiful move to the upside, and now it's kind of been mired in this channel back down to the downside. So if we just kind of draw something like that, and you can see that channel that it's been in. If we could get a breakout along with a breakout in life insurance, I think AIZ is going to be one of your stronger. I mean, look at it was breaking out above its prior highs back in December when the overall group is much lower. So if the group breaks out and money begins rotating in here, I think you got a winner with AIZ. But I'd like to see this downtrend channel break.
All right. And let's see the next one. Boy, I've been enjoying their commercials during the NFL games. Duluth Holdings, DLTH. Their buck naked underwear, I guess is what they call it. I don't know. Have you seen those commercials? Pretty funny.
I have seen them in the past. I haven't seen them lately, but yeah. I think there's a couple areas. First of all, I like this 20-day test. This is a stock that's been very strong. That was the breakout area. You've also got this gap area right in here, but I'm going to draw the line right in there. I'm going to say 29.5 to 30 is an area that I'd like to see hold. But you can see not only has the stock been moving higher, we got a dark cloud cover candle at the top. That's a reversing candle. which then led to the 20-day test. But this is a strong group that it's in. This is in the apparel retailers. So anytime you get a strong group and you got a strong stock within it, I like that. So I'm a fan. I think the 20-day test is where I would continue to look for entry.
Okay. And our final one, a lot of people wanted this one as well. Turtle Beach Corp. Here, HEAR.
All right. Well, it's definitely kind of lost some steam with a group that's been strong too. And this was one of the stronger performers. And then all of a sudden, the last 6 weeks, it's been going down. This is on my strong earnings chart list, and it's one that I certainly am looking. I actually owned it recently, and I got stopped out pretty quickly. And so I've been watching it as it's been going down, looking for like a reversing candle, a bullish engulfing candle, something like that. And if that happens to print, then I'd be much more bullish the stock. I think the problem right now is we just lost an area that I would have liked to have seen it turn right here at about 19 and a half. And so we're below that. We keep falling. I'm looking maybe for some other key levels. I think that's going to be a major one if we ever get down there. That's all the way down at 14. But that's where this volume came in. We went up to about 20, and that first pullback came back to 14, and we haven't lost that support level since. So maybe this will set up and reverse at some point here in the near term. I'd be looking for a reversing candle, and I probably wouldn't do anything with this until I see a reversal take place.
All right. And that's 10. It should be.
It is.
Yes. All right. Here you go. These are the symbols that we did look at today. There we are. I will have those up in the Market Watchers live chart list at the end of the day. I know you were having a few problems there, Tom, so no worries. We will get those up, though, as soon as I receive them. All right, it is time for our final market update. Let's go ahead and get into that. All right, here we are. Okay, as you can see, really some interesting trading, I would say, going on. Choppy trading on the Dow Industrials. In a really short-term picture here, I can see a descending triangle, and that would indicate we will see lower prices. Right now, Dow is down 28.29 points. S&P 500 trading lower on the day, opened lower quite a bit, and it hit its intraday low. Does look like it might be consolidating that decline, though, at this point. Currently, the S&P 500 at 2896.24. NASDAQ also down on the day and starting to consolidate sideways. You can see most of these major markets, S&P 500, 100, NASDAQ, all of them, as well as the mid caps and the small caps, all down on the day after a really rough beginning to the morning. The only one that has sort of a different type of pattern right now is the Dow, which has been trading in choppy fashion and is down only slightly, but really interesting to see all of the other markets struggling quite a bit. However, Canada having a good day. TSX is up. It is pulling back and taking back some of those gains on the morning, but still up 68.13. And we can see Treasury yields are unchanged currently at this time. UUP, big gap down and now consolidating that decline sideways. Gold, we saw a gap up, and it's also starting to consolidate sideways. GLD reading at 113.75. TLT is mostly unchanged. It is, it had a really deep decline in the morning, but it managed to get back into positive territory, but has pulled back pretty much to Friday's close, and we're only up 8 cents right now on TLT. USO, nice gap up, but could not hold those gains at all and are continuing lower. USO is continuing lower in a very steep declining trend, currently down 1/3%. USO is at 14.45. And that concludes our final market update. Let's go ahead and Tom, do you have a chart you'd like to show quick before I get started?
Yeah, very quickly. Just wanted to show, I talked about the transports earlier, and this was in my blog article earlier this morning, but here's your higher prices on the transports. There's your lower PPO. We got a negative divergence. I think we could possibly go down about 5% on the transports. I think that's the downside. risk here. And if we pull this up and just get a quick live version, you'll see today we are potentially putting in a bearish engulfing candle on the transports. So this breakout, slowing momentum, light volume on the breakout, and now reversing candle. This doesn't bode well. And of course, we are in the second half of September, so we do need to be careful. Transports could lead the market lower, though, so watch for that.
All right. Excellent. Okay, it's time for the DecisionPoint report. I'm going to give you the latest update on what happened last week by looking at some of these weekly charts, as well as looking at daily charts and giving you an idea of what I'm seeing for the future. All right. Let's start off with the Dow, since it has that very strange trading going on today in comparison to the other markets. And I'm going to actually annotate this because I think we need to move this overhead resistance line up just a hair. There we go. Get that even. As you can see, we're really in a trading range right now for the Dow. We hit the we hit that high from August, the August high, and have turned back down, it appears. You know, we have price still above that 5-day EMA, but look at the PMO right now. I'm very concerned. We have it turning down below its signal line. So although the trading is mostly sideways today, although volatile on the Dow, you know, seeing that PMO turning down below the signal line, that does give me a little bit of concern, but I'm really looking for mostly sideways trading. And in fact, when I did give my opinion last week to the Wall Street Sentiment Survey, I told them I was expecting mostly unchanged this week, and I still stand by that. Weekly chart right now for the Dow, we are in a rising trend channel. So that's the good news. And, you know, support has been holding, as you saw even on the daily chart, at the high that we had back in February, March timeframe. And the PMO is on a buy signal and it is rising. So in the intermediate term, I don't see any real problems as far as the end of a bear market or a big correction. It's just not showing up right now on those weekly charts. We're starting to see some deterioration, though, on the NASDAQ 100. And as you can see, I was marking this area as some very important support. We had the gap up from that area of support, and then that single OHLC bar you can see in the thumbnail turned into an island. And if we came back on Friday to close it, but are also continuing to the downside. So I would be watching, and I'm going to go ahead and annotate this one as well. I would be watching this rising bottoms trend line here. Let's get it more even with everything else. There we go. And in red. So that's really what I'm watching right now. And I'd say it's a little bit of a loose one, but I think that bottom is coming close enough. And of course, we have the lows that formed last week as the third touch to this rising bottoms trend line. We're getting ready to come down and test that. You know, the PMO is on its way down. It did top under its signal line. So I'm not expecting that rising trend to hold. That rising bottoms trend line. But I think support is awfully close when you look at it at about 7,300. That would still be a kind of a difficult decline for the NASDAQ. But you know, it's been really hurting as of late, and I've been waiting for it to turn around. Right now, industrials are the ones that seem to be holding up. The Dow is holding up fairly well. All right, this is the big problem we have right now on the NASDAQ 100, and that is a PMO sell signal that is in play now. We did not have it set up on Friday, which is why we did not log an intermediate term PMO sell signal, but we now have it in play. It's there, but it will not go final until the final trading day finishes on Friday. So once Friday's trading is over, if this is still there, then we will log it as an intermediate term PMO sell signal, but certainly not good to see showing up on the weekly chart right now for the NASDAQ 100. And interestingly, you know, I'm going to show you very quickly the OEX weekly chart. Notice the difference on these weekly charts for the OEX. Let's look also at the Dow. Look at the PMOs here. All rising, looking very healthy, right? And then also, let's see, and the S&P, same thing. looking strong, starting to decelerate a little bit on the S&P 500, but then compare that to the NASDAQ 100 weekly chart. And like I said, we're getting ready to have a sell signal. So the question I think that I would ask at this point is the NASDAQ 100 going to be a leader to the downside, or is it going to catch up and, turn around, get that momentum turning around on this weekly chart, the intermediate term PMO? Is it going to, the other market's going to carry it back to the upside? Technology has been hurting for quite some time. I'd have to say, looking at this chart, I would be very concerned about the other indexes at this point. But technology has been hit very hard. It's hard to, I wouldn't think that it would drag the rest of the market down, but it just seems to be too, the momentum is building to the downside, and I just don't see the other markets at this point carrying technology back to the upside yet. All right, as you can see with S&P 400 in a trading range sideways since, for most of September and, the end of August, where that range sort of formed right here at that low and that top. The PMO is on a sell signal on the daily chart, and we did just get a top below the signal line. So S&P 400, the mid caps, starting to show some weakness as far as the momentum is concerned. But honestly, I think you're going to see trading within this trading range for a bit longer. Based on that PMO, even though it turned downward, we're moving our way now to the middle of that trading zone. So that tells me we probably are going to go down and test the bottom, but I think we're going to hold on to that at this point. PMO doesn't look too weak there. Looking at the PMO on the weekly chart for IJH, the mid-cap ETF, we're seeing the turn to the downside, but we don't have a sell signal in play like we are seeing on the NASDAQ 100. Small caps, looking at the short-term picture, we're seeing support holding right here. And I believe we're going to continue to see that to hold. But we need to be careful because we do have a PMO sell signal. The key, the reason I'm not getting overly bearish here on the small caps is even we had that PMO sell signal, and the PMO has been moving its way down, but price really has been holding up, moving sideways. So I almost see this as a decompression period right now for small caps, but watch that support line very closely. If we lose that, IWM, we're looking at a drop down to that 165 level. That could be rather painful, I would have to say. So we'll watch to see if that support line will hold. I suspect it will. We're still looking at a scooter that's in the high side. So, small caps we'll just have to keep an eye on. And looking at the weekly chart for the small caps, you can see that there could be some issues building here in the intermediate term. Like the NASDAQ 100, we're trying to log a PMO sell signal on that chart. So keep an eye out on small caps. They're starting to show some weakness like we saw in technology. All right, let's take a peek at the indicators and what we've got going here. I noted when I read Carl's weekly wrap, and I highly recommend that you do so as well. He was remarking that we hadn't hit the top of this Bollinger Band yet, and then we started to turn back around. And I always find that interesting to see when we do get those penetrations. But a lot of times when you get up there and turn back down, it still portends some downside movement. And, the VIX is now back toward its moving average. We've got the decline coming after testing the top of that range of the Bollinger Band. I'm looking at these new highs, though, building currently, and no new lows. This is as of, just recently. These are Friday numbers back here for the advanced minus declines. Of course, we don't get those until the market closes. And we're still seeing healthy, there's still a healthy look to these numbers right now. And, new highs is still holding. So despite falling here, and, we got that VIX reading, but we got it alongside some really nice positive breadth. So I'm looking for this downside to continue a bit. And you can see we've filled in that little gap right there. PMO, or sorry, the VIX is still heading lower. It still has room to fall lower on this inverted scale. So basically, we're going to watch to see investors get more and more nervous. And when that gets stretched out, when that bearish sentiment starts to stretch out toward that lower Bollinger Band, that's when I'll start looking for some really nice rallies or move to the upside. But I think the fact that we have breadth holding up, despite seeing people starting to get more nervous with that VIX, I think that that's a good sign in the short term. And here, I think that these short-term indicators are confirming that. You have them rising nicely. They are not overbought yet. So this suggests that we should start seeing some upside in the very short term. And that should bring us back up toward that overbought territory. What'll be interesting to see is after the close today, whether these indicators continue higher. If we end up with a move about a 0.5% lower on the S&P, if we see lower prices even compared to what we're seeing now, that could maybe bring these indicators back down, start having them point back down. But they're rising so strongly, I really wouldn't expect to see that. And I would say as they're rising, that's always positive for the market. Where we get nervous is when we start seeing tops at the top of that zone. And we're not right now. Intermediate term indicators, they're holding on to rising bottoms support here. You can see we're getting a little bit of a breakdown on them. The biggest concern though I have, you're seeing them turning up, which is positive, of course, holding on to that rising bottom support. But the problem we have here is a negative divergence on the tops of these indicators. And generally that precedes downside activity. The question right now is, you can see where I've drawn that horizontal right after they topped with that negative divergence, and we got downside movement. The question now is whether that's enough, whether we need to go back down and test those lows. I would say at this point, if we get these indicators to turn back down, I would say yes. But since they have turned around and are rising, holding that rising bottom support, we may have dodged a bit of a bullet here as far as the intermediate term. All right, let's quickly go through our big four. I am currently bearish on the dollar. I am with Carl in that we've got this rising bottoms trend line. It's barely holding. And honestly, if I go in here and annotate, I can see that we've broken down below it. You can see if I bring it back to get these two bottoms more close to that rising bottoms line, you can see right now we're trading below it. So if we close below it, I think that's going to be especially bad news for the dollar. And the PMO is suggesting that we're going to have to go down and test some of these support areas at that July low would be the next place I'd look for, close to about 24.80 for UUP. The weekly picture there, I think, supports a bearish outlook. We're starting to see, we were unable to hold this area right here where we had the tops back in 2017 and 16. And, we got up here, didn't even quite get to overhead resistance, and then we're turned back down. You can sort of see this rounded look, a hook coming around here on UUP. Look at the PMO also hooking around. If we can hold that weekly, that 17-week EMA, that would of course be especially positive. That's right now about at $25. And our last price on UUP is at $25.06. So I don't think we're going to end up able to hold that $25 and that 17-week EMA. So that's got me concerned. I think the peak here on that PMO also is telling me the dollar is going to have some problems. Gold, however, I'm somewhat bullish on gold. And I say somewhat bullish because, we had that breakout above that 1200 level, but we just couldn't get up to 1240. And now we're starting to consolidate sideways. We have bearish discounts here. We're still seeing very high discounts, and that tells me that investors are still bearish on gold, and that, sentiment being contrarian can be good for gold. The PMO is trending higher. I just am not seeing the kind of movement I would like to see out of gold, given all the positives that have lined up for it. But I don't think I can't get, bearish on it at this point because it's holding up at this area of support here. This is a really long-term support level. From that 2013, both of those lows. You can see all of these different touches. I didn't even mark those. And we're holding that level of support, bouncing off of a very long-term declining tops line. All right, I can see we're getting low on time. I need to start with the big four next time. All right, USO, honestly, we're just not getting the kind of action here that we should expect after we got a buy signal, starting to get choppy, not liking it. So with USO, I think we're going to be in for some downside here. Look at price being squeezed. And that sell signal in the intermediate term. I'm not feeling good about oil right now. And, certainly bonds I've been bearish on. I continue to be bearish on. Look at that double top, PMO sell signal going on, scooter in decline. The OBV is holding on to this area. I don't suspect it could very much longer, but when we start seeing the OBV turn up, I could think about getting more bullish on bonds, but not right now. And that giant head and shoulders still in play. And look we're getting ready to have a PMO sell signal in the intermediate term here. So all bad news. So let's go ahead and we'll bring up those. Yes. So here's what happened last week. We had 3 PMO sell signals come into play last week. And I think that's telling us that we do have some issues here. Also, here are the indicators and where they're set up currently. And again, I always put these in the Market Watchers Live recaps. So if you go to the one dated for today, September 16th, you'll find these slides. But basically, I'm just, the market is still looking a little bit suspect. And here we are on the big four. And, dollar, I'm bearish, neutral to bullish on gold. Like to see better, more positive price action there, just not getting it. USO bearish, and of course, bonds bearish as well right now. Whew. All right. I think I got that. I know we're getting ready to shut this thing down. So just squeaked in there.
Yeah, you definitely did a good job. There are a couple things I think we need to watch here. Obviously, the big reversal on the transports today is not good. I'm watching the XLY, which is consumer discretionary. It's challenging its 20-day moving average. That's been an area where we have held for the most part over the last several months. I mean, not every time, but we start heading into the second half of September, unable to hold support levels there. Could be a problem. And then, of course, the Russell 2000 trying to hold on at 1707, struggling there as well. So we want to watch the action this afternoon for sure.
Absolutely.
All right. Well, we got a lot coming up, as you can see there on the screen. I do, again, want to thank everybody. I did get a lot of emails asking me to be safe and all over these past few days. So I want to thank everybody for those emails. Appreciate it. We did hold up well. We got flow out of here. So I think we're in good shape now as we move forward.
Yeah, I'm glad to hear that. And I know I'm going to get you the rest of this week as my co-host too, which is always good.
Back together.
Yes.
I do want to thank everybody, all of you, for being with us today. Please remember to complete the survey as you exit. We do like to get your feedback and hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we'll see you back here tomorrow. Happy trading.